Hello, everybody, and welcome to a episode I don't have a name for. So, so I got an update to the bank loan. I just got off the phone with my banker. So, to give background to people who may have never seen one of my videos before, I created a business plan. The business plan has a $50,000 investment / loan requirement or startup amount. I made application with Wells Fargo for a business loan. I was approved for $15,000 of the 50 with a line of credit, a small business administration line of credit. We have been waiting a long time to get an update on that, trying to see if we can get that increased or see if there's another program available through Wells Fargo to get to the $50,000 that I need. I have a couple other videos of some of the interesting events that occurred between the application and now. My banker talked to the special guru wizard banker in New Mexico, and so what he has stated was he was actually surprised that I got the $15,000 to start with. He thought that was high, because the way they do that is they go 10% of the expected revenue of the business. And so I've had revenue last year. My revenue was $60,000. So that would be $6,000. If they would say with this loan he'll make the same amount of money that he made the previous year, which I guess doesn't make sense. So maybe $10,000. So I think that's what he said. I think he said that he would have expected $10,000 because they would have said, well, he made 60 in sales the year before. With this money, we expect him to make 100,000 in sales, and 10% of 100 is 10,000. That's what he would have approved. So now we're in this situation where, yeah, that makes sense. If I was operating the business as I have, but with a loan to buy inventory to expand the business, yeah, maybe I do get to $100,000. Okay. However, the loan isn't to expand the business as is. The loan is to expand the business significantly with a storefront, thus allowing me to buy more inventory at better prices at a lower acquisition cost. That's not just what I pay for the product, but the labor it takes to acquire the product. So instead of going to every thrift shop every day, I can have people coming in with their collections. It can be more of a pull situation rather than a push situation. And people can come in with collections. I can buy those collections, higher sell-through rate, be able to have brand new wax in store. Whether that be like Upper Deck, for example, will only let you sell their product in a hobby shop. Their hobby product in a hobby shop. So the concept isn't, well, I'm not taking the loan and expanding the business model exactly as is. I'm expanding it to sort of a new thing, a significantly expanded situation. So my expected revenue with the 50 wouldn't be $100,000. It would be, I think I have 325 as first year revenue. So even with that situation, they'd be looking at a $32,000 loan at my projections of 325 for first year operation. Okay, so that's where we're at. He didn't think there was another product with Wells Fargo that I would be able to utilize to get to that 50. So the next step is going to be going to a smaller bank. The bigger a bank is, the more you're going to have this situation where the banker is not the decision maker. The banker is a liaison between the customer and the underwriter, who is the end decision maker. At a smaller bank, and I didn't know this, but it does make sense. At a smaller bank, the banker many times is also the underwriter. So by talking to them directly, you can sometimes get better service because they go, okay, I understand what you're doing. The underwriter didn't have a 3-hour conversation with me about the business, what I'm doing, he maybe looked at my business plan. I'm not sure if they did. Maybe they did. I don't know, maybe not. But that banker probably would read the business plan, look at it, talk with me, and go, oh, okay, and then maybe come up with like, oh, this is an investable business to release a loan to. So that's going to be the next step. What's kind of cool is, so the initial thought is, well, just go to a small bank right away, which, yeah, okay, maybe. Right, that was actually my original plan. I just was like, oh, I have all my accounts with Wells Fargo. Let me talk to them first and just see where I'm at, and then pursue it. I thought either they could do it or they'd be like, get the hell out of here, you know. And then I go to a small bank and get it done. But here's what's kind of cool about going to the big bank first: is you go to the big bank, you get what you can get done. And I didn't think of this, but there are former employees of the big bank who now work at smaller banks. And what he's going to be able to do, my bank is going to be able to do, is contact a former Wells Fargo employee that works for a smaller bank, somebody he has a relationship with, and say, hey, I got this customer, and this is what he's about, and this is what he's trying to do. Do you have, what do you think? And they can almost go, they could go, no, can't do it. And then, okay, now we just saved a bunch of time, you know, because if they're like, nah, I don't think so. Now, I don't got to go down there and make an application, start cold, explain the business cold. They're not really sure who I am. I also don't have a relationship with their bank. I don't have a checking account. I don't have a savings account. I don't have a mortgage. I don't have a car loan with them. That'll be nice. You're going to get that introduction from a banker who I do have a relationship with. They have a relationship with that banker. That's breaking the ice. We'll see how that works. We'll see what they say. They may go, no, this is a horrible business. We're not going to give them any money. They might say, yeah, it's worth investigating, and then I won't get anything. Or they'll say yes, then either I'll get what I need or I'll get another chunk of what I need. All right, so that's where I'm at right now in terms of my loan personally. I did ask a few extra questions so that I could help anybody else out there who's doing reselling, who might want to expand in the future, and some of my thoughts on what I think, what I would have done in the past, knowing a little more information that I know now. So, I got it written down up here. Otherwise, I'm going to forget. I just got out the phone, and I wanted to do the video right away, so I didn't forget stuff. Then I wrote it down. So, one of the things we talked about was the banker in New Mexico, and most of the underwriters I talked to with Wells Fargo was like, you can call back in 6 months and ask for the amount to get raised. Which, yeah, I mean, that's the way that works, right? They want to give more money. The more money they give me, the more money they make, you know, so that's, yeah, I know they want to give me money. All banks want to give you a loan because they make money on the loan. So I said, okay, so I said, what I want to know is, how do I use I said, let's say we go to the next bank and the bank says, horrible business. We attempt to refinance the house, which we have enough equity in the house to do it, but that's kind of a last option. I'd rather get the business loan, start the business, go on, and then refinance the house and use it to renovate the house. Lord knows I need a new basement down here. But the house needs a renovation. I'd like to leave it to, you know, that we can renovate the house, get it ready, because my wife doesn't want to move to a new house, and we would like to turn this into a rental, but it's not really rental ready yet. It needs a new kitchen, needs a new bath, and needs a new basement. So it needs a lot of work. The house we have now is perfectly fine for living in, but it's not going to wow anybody trying to rent a place. So that's what we want to leave that for if we can. If that's the last option, then it's fine. We'll just do that and go down that path. Okay, so I said, all right, so how do I use this line? Let's say that all happened. Let's say we go to refinance and they say the house is worth $10. I'm not giving you any money. So now I have the business as is. I have a $15,000 line of credit. How do I use the line of credit in a sense where in 6 months, Wells Fargo will go, oh yeah, I like the way he's using this. And I got some interesting feedback. So first, it's just like a credit card. Never use more than 30% of your balance. If you use more than 30% of your balance, that's a bad mark. That's the same as your credit score. If you have $10,000 in 3 credit cards, you should never have a balance of 3,000. I don't know if it's per card. I might be wrong. I don't know that part. I don't think it's per credit card. I think if you had 2,500 on one, that was 4,000, and then you had 250 on the other two, then I think you're still at 30%. But I could be wrong about that. Maybe it needs to be each card. So I said, with the line, never exceed 30%. So that's the first one. That's just like credit card. That's pretty simple. I asked them, well, what I'd like to do is I'd like to use it almost like a checking account, in the sense of just all my business purchases put on that line. And the way I do business is every Friday. So after I do this video, I'm going to close my books for the week. I'm going to pay all my clients. I'm going to send the money to myself that's left over. Pay, whatever I need to pay for that week. And that way I'm I'm only a week behind on anything at any given point. I said, if I do it that way, if I'm going, put all my business purchases on here, at the end of the week, close my books, transfer that money, and then on Monday, pay off the line of credit, is that a good thing? Yes. So, okay, so first thing, using it like that's good. That's a good way of using it. But let me see. So the second thing is, what he said that was interesting, that I wasn't expecting, was he goes, one of the things you can do for in 6 months is keep records of how you used the line and what that has meant for your business. So say, no, I keep really good records anyways, but it does make sense. So, okay, I needed this loan to buy this inventory on August 1st. By October 1st, I've made a return of Y on that loan. So I paid the loan back. I made Y amount of money. So we're showing that I can use financing to invest in inventory and make a profit on that inventory. Well, that's gonna incentivize them to give me more money, so I can make bigger purchases and I can make more money. So that makes a lot of sense after he said it. So once he said it, I go, oh yeah, that makes sense. But I would have never thought that on my own. I would have never been like, oh, I got to show them that I'm buying inventory and making money on it with the line of credit. So one of the things is I do a lot of consignment sales. So what I may want to do is I may want to go out picking more. I'm not really going to put any consignment sales on the back burner, but maybe instead of picking up a new consignment client, I go out picking more, I invest in more inventory, and then I can show, hey, look, I bought $5,000 worth of inventory in 3 months, and I turned that into $20,000 in revenue. Or, now, it wouldn't be $20,000, it'd be $24,000 extra in revenue. So if you give me $1 million, I'll tell you, I don't think that'll work, but if you give me, 30,000, then I can do bigger deals. So here's the conclusion on that. If you're like me and you're thinking you want to expand it to a bigger business, it might very well be worth right now, go down to your bank, get that line of credit, put all your inventory purchases on the line of credit, and demonstrate, look, I bought this, I made this much off of that line. If you give me more money, I can do more things with it. and then you'll have that track record as you go on. And then when you need $50,000 for a store, you might already have a line of credit built up to that larger amount. You know, it doesn't hurt. Now you do pay a little bit of interest on your purchases. So the way that works is it's daily interest. So if I'm buying inventory on a Monday and I pay it off, well, if I buy it on a Friday, late on a Friday after I did my book, and I pay it off the next Friday, then I'm going to pay a week of interest. The interest on a line of credit is not real high. I think mine's about 10%. 10% on a week of interest is like 2.5%. You know, because it's only a week out of the no, that's not even right. The monthly would be 0.8%. So a week would be like 0.2%. I'm doing that off my top of my head. So it's 0.2 of 1% you're gonna pay on that inventory purchase. And if my brain is totally wrong on these numbers, then feel free to calculate it on your own. So if it was 12%, it would be 1%, and then a week would be 0.25% interest on that entire purchase. So I wasn't prepared with the math on that one. But yeah, so the point being, it's not a ton of interest that you're paying on those purchases using the line of credit. So even if you just used it for inventory and then you use checking account for all your other expenses, then that would still accomplish the same objective for your business. So I think I talked about everything, all the ideas I had. Hopefully this helps. Some people watching it, they're thinking about maybe one day expanding considerably. Start doing your financing now. Go out, grab that line of credit. I mean, you can even buy inventory paid off the next day. I mean, it's not, I'm doing it in a week because it just makes sense for me. But if you buy inventory paid off the next day, you're paying 1 day worth of interest or 2 days worth of interest. There might be a minimum. Yeah, who cares, right? That's not a big deal. So hopefully that helps. I'm real excited. I'm excited that the first step is completed. You know, a lot of people get devastated at no. So some people might be like, oh man, I really want to do it with Wells Fargo. They said no, now I gotta go to the next bank. I'm devastated. Be happy. Be happy because, okay, 15 with Wells Fargo, that's done. Now moving on to the next step. That's a good thing. You want to get to, is it definitely a no? Is it for sure a no? It's a no? Okay, cool. That's done. I don't got to worry about Wells Fargo anymore. I don't got to worry about, wow, Wells Fargo might give me this. I know they won't, so let's move on to the next step. So that's a little more self-affirmation advice, but, you know, a no is not necessarily a bad thing. A no just means, okay, now let's look at we can pursue our other options at this point. Thanks for watching. Kind of a long one. Let me know if you have any questions or any tips. Like, have you tried to get a loan and some of the any tips or anything that you do that makes getting the financing easier? That would be cool to know. Definitely wouldn't turn down information about that at this point. Thanks for watching. Have a great day, everybody, and I'll see you soon with another sold video.